Hello friends, welcome back to another video. In this video I want to discuss about one important stock. I want to discuss about Mahindra and Mahindra. Before we go into the topic, so let me give you a regular disclaimer that this is not a buy sell recommendation, and this is also not a I'm also not a SEBI registered analyst. So if you want to take any position, you take your do your own research, and then accordingly you take your position. So consider this as a purely educational video, and then take some of the important points that you want to take from this video, and then accordingly you can take your decision. So right now I want to just focus on this Mahindra and Mahindra, and then give you a overall high level picture of what is happening in Mahindra and Mahindra. If you see the entire auto sector, so auto sector has been bullish actually in recent days. So many auto sector stocks are doing really well. So one stock which I am actually tracking is Mahindra and Mahindra. I've been tracking it for a while now. So if you see this, the stock has been in a nice uptrend, and then it has reached a high of, let's say, 3200, and then 3200 in September 2024, and then from then on it almost consolidated for an entire year, 1 year full consolidation. So that's, there is a rally and there is a consolidation, and then from that consolidation it gave a breakout, 3200 in September. So for this stock, this 3200 is a very critical level. If you see, one rejection here, another 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 rejection here, there were multiple rejections that this stock has taken from 3200, and finally it has broken out of 3200 in just a month ago. Now, if you see, after it broke out and then it retested. It retested and then it went, and there was a huge gap up. So this huge gap up was majorly because of GST reforms and all those things. But nevertheless, this gap up, this huge gap up, also is a result of this huge build up. If it is not break up, if it is not gap up, if it is not because of GST reforms, probably it would have been one more candle. That's all. It's not that something has happened because of GST reforms. GST reforms have added value, and then all of a sudden there was a gap up. But otherwise, it's a natural course of action that this stock would have taken, even if not for GST reforms. So then, because of this GST reforms, there was a huge gap up, and then it went again, and then there was a correction for the past, let's say, 1 2 3 4 5 5 days. There was again a correction in the up move. So there, in the stock market, up moves and down moves will never be like just a straight line. For example, they will not actually go like this. Let's say, let me just show you. So for example, if the stock has to move from here to here, it will not move like that. Rather, it will move like this, and then take a pullback, move like that, and then take a pullback, and then it will reach the target. Okay, so that's how always the moves will be. Now the stock has to move from 3200, that's a breakout level, and then approximately 4000 is the target that I'm actually setting for this stock. Why 4000? 4000 is usually, let's say, that's a breakout level 3200, and look at the depth of the consolidation. The depth of the consolidation is here 800 points. So if you see 2400 to 3200, so that's like a 800 points. So from 3200, if I take 800 points, that will be 4000. So I am just taking a rough approximation of a measured move. This is called a measured move. Measured move means stocks also in the stock market moves in measures, like particular patterns will have particular target. So this particular consolidation pattern will have a target of 800 points. Because how do we know? Because we know from the depth of the consolidation. That's the from the breakout level it will move that much depth upwards. So downwards it is 800. So obviously it has to move 800. So around 4000. That is not cast in stone. Everything is a probability in stock market. So we are now targeting 800 points up. 800 points up is 4,000, 3,200 to 4,000 it has to go. So since it has to go to 4,000 from 3,200, so how is it going? It is going in again uh, in a zigzag way. So it went one push up and then down. That's a retracement, and then again one push up and then down, and now again it is ready for the next pull, next move. So this next move directly can take us to 4,000, or there could be almost close to there, let's say 3,800, 3,900, and then one down and then maybe up. We do not know, but ultimately I think I believe that this stock will reach 4,000. Now, why am I making a video at this point of time? The ideal entry for this stock would have been 3,200. Okay, in case if nobody has taken, if someone has not taken up entry at 3,200, then today is also a good trading opportunity. What is the opportunity that it has given today? The opportunity that it has given today is, in the pullback it has formed a engulfing candle. Yesterday's candle, if you see, that is 16th September candle. So that's an engulfing candle. In the pullback, if it forms an engulfing, that means it is ready for the next move. For example, you see here, broke out and then retest of the breakout level, and then engulfing candle, and then again move up. So again pullback and then engulfing. So it is ready for it. So how do we actually approach this? How do we convert this into a trading opportunity? The trading opportunity is, now enter at this price, that is 3,000, 3,600, okay, current market price. Keep a tight stop loss, that is stop loss of 3%, that is 3,500, and then look for a target of 4,000. So that will be a 1:3 risk reward ratio. I know that we are actually keeping a very tight stop loss. That may be slightly difficult, but if somebody wants to keep more conservatively, let's say 1:2 risk reward ratio, if we target, now somebody can keep a target of keep a stop loss of 3,400. So this is also a good. So 3,400 at any cost needs to be respected. If it falls below 3,200, that means the stock is not in uptrend, that is for sure. So you need to exit at 3,400. So conservatively, if you want to exit even before the 3,500 is also okay, but that may be too tight. But 3,400 and then target 4,000. So that will be the trading opportunity. 1:2 trading opportunity it gives. So 1:2 trading opportunity is a very good trading opportunity. It's not actually a bad trading opportunity. 1:2 is a very good trading. So most of the trades in stock market are 1:2, not more than that. People may say that okay, 1:5, 1:10. So there are very rare opportunities that will not happen actually. So most of the realistic trades are 1:2 trades. If you are able to get 1:2 trades on a regular basis or more than 50% of the times, that means you will become very rich. So that's the math. You do that math and you will realize that that's a very profitable position. But nevertheless, I feel that there is a good trading opportunity, and the important lesson or educational content is, so in the formation of the engulfing candle. So engulfing candles are very powerful candles, candlestick patterns. It has formed that engulfing candle in the uptrend. So that means the stock is now ready to move to the next destination. So that's the video that I wanted to share with you. So if you like this video, and then subscribe to my channel, share this channel with your family and friends, and also I will provide the link for a Telegram channel and then a Twitter channel. So you follow me on Twitter and then connect with me on Telegram channel for any personal suggestions or any analysis or any particular videos. So let's end this video here.